All right, guys. Well, thanks everyone for joining the spaces. My name is Sam. I lead growth at Liquity. Today, we're blessed to be joined by a very interesting panel who've been in crypto for a long time, and also our DeFi OGs in the space. First of all, I'd like to introduce our guests from Euler Finance, Euler Finance. See, I almost messed that up. Wow, I was just about to start that. Patricia, or Zero Expat, who is the ecosystem lead at Euler, and Seraphim, who is the head of risk at Euler. And from our side, it's myself. I lead growth, Sam, and I've also got Token Breeze, who is our DeFi strategist at Liquity, amongst many other hats. Cool. So I guess, the purpose of today is really to, get an understanding of Euler and Liquity, and also to have a more of a general discussion around DeFi 2023, what we're excited about, what we'd like to see, how we can promote decentralization, variety of different things. But I guess the first thing would be, so I'll ask this to Seraphim, I guess. What is Euler in your words? Whoops, I think the issues are coming back. Patricia, maybe you'd want to answer that.
Yeah, sure. So Euler is a linear borrowing protocol, but is meant to be permissionless. We have a much more conservative collateral assets. So in terms of risk parameter and etc., we're much more conservative than other linear and borrowing markets existing in the space. We're currently only live on Ethereum, but we're planning to go to other chains, potentially layer 2s in the very near future. And currently Euler is basically the place we see a lot of traders trading LSDs. So currently, Euler is the only place you can stake these in both ways. You can long it and short it because it's listed as a collateral. And the CBE's Coinbase stake these is going to be listed as a collateral once we have supply and borrow caps. So that's quite exciting new things coming onto the main protocol. And at the same time, we're also developing two more products. One is currently called Baby Euler, or the E-modes, which is kind of like the isolated linear borrowing markets where pretty much anything can be collateral. And another one is Euler AMM, Euler Swap. It's basically like a Uniswap V3 and Curve combo. Yeah, I hope that covers everything basically.
Oh, for sure, yeah, that's very cool. I will get on the baby Euler in a little bit because I'd like to know a little bit more about that. But one thing that compared to other protocols, one you support quite a list of long tail assets, but I think one of the ways in which you support that quite well is down to the different asset tiers that you've got. Could you kind of give a quick insight, either yourself or Seraphim again, as to how you decide on these tiers and what's the differentiation is for each? It can be short.
Yeah, Seraphim maybe can go forward for this one. He's our head of taking risk.
I'll be back actually. Finally works for me. Can you guys hear me? Yeah.
Yeah.
Oh, perfect.
Yeah.
Because
so the asset tiers work. So when things get listed, they become isolated assets, which means you can borrow them, but you can't use them as collateral. So that's the default. They got pretty conservative borrow factors. Like you have to be 4x over collateralized to borrow something. And then governance kind of decides what to do with that. They can increase it, decrease the borrow factors, or even make it a collateral asset where you can actually use things as collateral. And it's kind of neat because, for instance, Lido was a lot of people wanted to trade Lido, and you couldn't really do that much in DeFi. So what people did, they activated Lido and Euler. A bunch of people put in $2-3 million there, and you could borrow and short it while not actually using that as collateral. So the protocol as a whole was kind of safe, but you can still trade and short isolated instruments, which is neat. So yeah, that's how exactly what makes something better as collateral is probably up to liquidity. Overall, presence of Chainlink oracles is definitely a good thing. But yeah, ultimately it's up to the DAO, really. So.
Very cool. I think, kind of turning this back to us at Liquity, I believe LUSD just recently got accepted as a cross-tier asset on Euler. And, a big part of this was down to our DeFi strategist, Token Breeze. Token Breeze, maybe, do you want to talk a little bit more about the governance process on Euler, how that was, also to give an insight to the community as to how that all worked?
Yeah, no, it was pretty straightforward to be honest. So at USD, what's really nice about Euler is for instance on Avi, it's a very rigid process where you go through the first step, you get accepted, you have the beginning of a market, and so on. Where on Euler, it's more, it happens organically, where the asset might start to get some usage, some traction on Euler, and this is what happened for LUSD. So we got a ping from Seraphim, was it you or someone else from the Euler team, and suggesting us to look at making a proposal. And so initially, I kind of was a bit too greedy, as I was ambitious enough to make a proposal straight to collateral tier. But after some feedback, I understood it was a bit too much. So we went for cross asset instead, and worked more into figuring what were the best parameters to adjust. The whole process is pretty straightforward, and looking forward for Euler to have the supply and borrow caps implemented, so we can move forward with the collateral tier proposal.
Yeah. But yeah, I'm quite excited
Absolutely.
about supply and borrow caps actually, because it will allow bigger diversity of collateral assets. Because basically what you want to do is you want to have you want to make sure that the supply cap is there in case, let's say, the amount of LUSD on Euler does not exceed the overall on-chain liquidity. So if there's like lots of people are levered up and there's $20 million exposure of LUSD and the on-chain liquidity is just like, I don't know, 2 mil, that means a lot of liquidations might not be able to happen, And that's why supply caps are so exciting, because you can just set a cap and kind of be able to sleep at night knowing that nothing's going to blow up. So after we implement that, it's going to be quite much easier, I think, to onboard a bunch of collateral assets in the future.
That's very cool indeed. One question I had, and this is also from my own personal knowledge, Seraphim, like how do liquidations on Euler work again? I believe you have something called a Dutch auction, correct? But could you expand a little bit more on the liquidation process on Euler?
Yeah, it's kind of an improvement over what the other guys were doing. One aspect, first of all, we have to define is that when you borrow things, you get a D token, like a debt token. So with tokenized debts, for the reasons I'm going to explain in a sec, but when somebody gets liquidated, a liquidator can come in, take on the debt, take on the collateral of someone, and choose to hold that. So that's only possible because you've tokenized the D tokens, the debt. And then if they want to actually repay the debt and sell the collateral, that's sort of subject to a sort of an auction, which means there's no fixed percentage being paid to liquidators, actually determined more or less by the market, which is why liquidation bonuses tend to be lower on Euler than other protocols on average. Also, it's not like half of the loan is liquidated like on Compound and Aave. It's rather kind of the smart contract calculates how much is necessary to liquidate to get you back your health factor back to 1.25. So if you dip below 1, you're in liquidation territory. If it's 0.8, it gets you whatever. You can liquidate as much as you want as long as it gets it to 1.25. So on average, liquidation sizes and the amounts paid to liquidators are lower because of that.
Yeah, on Euler, Dutch auction liquidations results in like liquidation bonus to average about like 2%, and on Aave and Compound, I believe it's about 8 to 9%. So if you are lending a lot, like let's say in 10 mils or above, then the amount you'll be paying when you get liquidated on Euler is way lower than on Aave and Compound or any other protocols because of the Dutch auction. And also at the same time, it's like if your health score went lower, and you can just like get liquidated for a small amount, as Safa mentioned. So that's called like soft liquidations in your Euler system. So you don't have to like lose your entire collateral.
Very cool, very interesting. Talking Breeze, I think one, with the update of LUSD as a cross-tier asset on Euler, and it also being collateral on some other platforms like Angle and Mimo. One thing that comes up, obviously, is that LUSD has a soft peg between $1 and $1.10. How could users essentially use platforms like Euler really to trade around that soft peg? Could you provide like some insights as to how a regular user could use these lending platforms and protocols?
Sure. Yeah. So having LUSD as a borrowable asset is very interesting to open up essentially the pool of users that can short LUSD if they want to, because the usual way to do that is through Liquity directly. If you see LUSD, in your opinion, being high in price, you can simply deposit is borrow LUSD and sell those LUSD, and we buy them when the price is settled. But the problem with that is that you can only do that with ease, because that's the only collateral accepted on Liquity. So we've been looking into having LUSD markets on money markets, first AVI and now Euler, to essentially enable holders of any assets supported as collateral on those markets to take part in those strategies too. So they could use stable coins as collateral, wrap Bitcoin, ETH, whatever they fashion really, state ETH even. And so it just widened the pool of people that can take the trade of shorting the peg, essentially. It's a bit early to say the impact, but we've seen a nice adoption of the Euler market, that's for sure. I remember, was it like a month ago, maybe a bit more, 6 weeks ago, we had pretty much close to parity between Liquity and Avi's market for LUSD, and both were around 1.6, 1.7 million supply. And now we had and I was wondering if we would see a money market flippening for LUSD, and that effectively happened with the promotion to cross-tier, where now the market is pretty much doubled since then on Euler. Sorry, I'm butchering the name every time. Euler needs to sing that one.
I've started following Patricia on Twitter, and from that, Euler is now being like a repetition in my head that you have to pronounce it as Euler.
Yeah, it's a German pronunciation, so I get it. Like a lot of people don't know how to pronounce it.
Is the inspiration behind the name around the mathematician, actually?
Yeah.
Right.
Yeah, actually, mathematician's like first name, I actually don't know how to pronounce it. It's like Leonhard Euler. I think that's like how it's being pronounced. Like he was like basically a Swiss mathematician that was the greatest one of the 18th century something. And they had basically like came up with the E, the Greek E, like in math. It's called like the Euler number, and it's like used to calculate how wealth can grow due to like compound interest. So that's the reason why we picked the name. But it's Euler.
Very cool. Moving on to a little bit more about the community and the decentralized ethos that you guys follow as well. I mean, we can talk about a little bit about the Liquity side of things, but we'd be keen to know, like, how has it been for Euler and you guys, Patricia, growing a community with a decentralized ethos at Euler, since you also have some governance in terms of accepting assets and whatnot. Like, how has that whole process been at Euler?
Yeah, for sure. So I was first tapping into like the community side of things. Like, well, in the bear market, as we're in right now, like the community activities has been like reduced quite a lot, which is common across many different protocols. But at Euler, we do have a very strong community around the protocol. At the same time, we have some really talented and smart people in DeFi, like very active in the community. So we do get a lot of like feedback in terms of like the product design, UI, UX, and also like asset tiers and related governance proposals of these assets. So on the community side, we're really like grateful to have this small group of people that are like really smart and active in DeFi. And on the governance side, is like we wanted to build a very decentralized governance system from the beginning, but we also understand like decentralization is not like a one-step thing. It's like yesterday you're decentralized and today you're decentralized. It's more like a gradual process. So there are a lot of proposals going on to the governance system recently in the past 2 months about how we can like further decentralize the governance systems, like who can propose proposals, and what should the governance like process be looking like. There's a recent proposal actually I put up like 2 days ago on how do we like classify different governance proposals, and there's one specific category is dedicated to everything related to changing the asset tiers and also the risk parameters of the entire protocol. We're currently calling it EIP Euler improvement proposals, and those proposals will have those hardcore DeFi users contributing, and Seraphim himself as well, contributing to the discussions of like how collateral assets should be determined, what kind of like borrow factors should they have, and etc. So yeah, both sides on governance and community were doing pretty well, and we're really grateful for that.
Very interesting. And yeah, that's great that you guys are doing that. I think, more you can improve governance proposals and governance in general. I think it's for the better for the whole crypto ecosystem. I feel as well, because a lot of decentralized theater seems to go on quite a lot of places. Cool. I guess one thing for us, with the release of Chicken bonds, we obviously have a new asset called boosted LUSD and bLUSD. A lot of Liquity fans and people who are using both Chicken bonds and Liquity tend to ask us, like, when bLUSD as a collateral asset or as a cross-tier asset and on Euler. Now, you mentioned earlier that I believe one thing that Euler does have is that it relies on it requires assets to have either a Uniswap oracle or a Chainlink oracle, I believe, correct? But then you also mentioned something about baby Euler and how it's going to bring something new to the game, and perhaps it could be something that where bLUSD could be a part of that. Could you expand a bit more on that, if that's cool? Maybe some alpha, Seraphim, perhaps.
Right. So yeah, basically, Baby Euler is an exciting project we're working on where we will allow anything to go as collateral, basically, without risking anything for the main Euler protocol. So the way it would work is, let's say XYZ token gets deposited into Euler, you get EXYZ, which is the interest-bearing version of that, and then you can take that EXYZ token, deposit that into Baby Euler, and allow it as collateral. And when somebody wants to, lend assets against this EXYZ token, they'll say, okay, I'm going to deposit, let's say, USDC, and we'll also allow people to kind of borrow that against the XYZ token. So with bUSD, it will be possible, for instance, for people to opt in with their USDC and say, I want to additionally lend that into the bLUSD pool on Baby Euler, so people can borrow that. And that's quite exciting because I've heard quite a few funds who love trading bUSD. So I would expect there to be demand. And actually, I've seen bUSD is like one of the few things in DeFi growing. Like it's like went from 0 to 80 million TVL from November, right? So it's just interest seems to be there. So I think it would be quite cool.
It's not the only thing growing. I was checking the DeFi Llama as we were speaking. It's interesting to see Euler is pretty much up only because it launched in 2022. So most of the TVL and price butchering already happened too. But yeah, you really see a trend in some DeFi protocol. If you look at the ETH-based TVL, it's more telling and denominated in ETH, so you have a bit less of the variant of the price. And then it's about what is the trend more recently. Have they been regaining TVL in ETH denominated value since let's say July or last time where it was really depreciated? and you really see the different trend on the protocols that were here at various stage of the market.
Yeah, it's nice to see it's not going to shit after FTX. Pretty much, like it's like that was the craziest 3 days of my life. But yeah, I think the crucial bit I suspect is that we're one of the few or the only protocol that allows you to trade state ETH both ways. So you always get additional interest there. Like if you look at Euler now, there's like 4.8% from Lido if you lend to state ETH plus 63 basis points. It's usually from 60 to 120 basis points, right? Most of that is mining Euler tokens, to be fair. But when market volatility rises, we actually see shorts coming in and shorting state ETH, which pays for state ETH lenders. So I think because of that, we've been able to constantly, just to always grow from that perspective because you always get more yield. And that's also why we have CBE as collateral coming soon because you already earn like additional 90 basis points on CBE deposits on Euler. So yeah.
As far as I know, I think I've not really seen other protocols where you can earn a yield on CBE as well. And I think like a month ago when there was quite a bit of a discount on that, like that was I think there was a 5% discount on CBE, like around Christmas time. It's quite appealing on Euler.
Yeah, it would have been an amazing trade if we listed it quickly. But the problem is with DeFi, like everything takes longer. Like you think it takes 3 days and it takes 2 fucking months. But it's just how it works because you guys know it, right?
Yeah.
It always takes longer.
Yeah.
But it's a price to pay for making sure it doesn't blow up.
Now that you say that, I have to take the opportunity. When baby Euler?
Oh my god! No, I'm thinking. I think March should do because I think it's really not the actual like writing of the smart contracts that takes time, but the things around them like auditing, UI. I feel like our smart contract devs, they just write it overnight, and then 90% is just like getting it through audits and UI. So hopefully March, April, like the latest.
Yeah, keep our hopes high.
Yeah.
That's not too far away. We're already halfway done through January almost. Cool. I guess, one question I had for all of us, I guess, is one thing that we're all excited about DeFi in 2023. So, anything like, let's start with Patricia.
Yes, sure. So I expect to see a lot of like different experimentations going on with the DeFi space. Like last year, we spun out a lot of like experiments, but a lot of them like failed tremendously, such as like rare fuse and etc. I'm quite excited to see like other accelerated market experiments alongside Baby Euler to get spin up, and I'm quite bullish on seeing all different kind of like DeFi derivative exchanges such as CMX, more projects like that being spun up, and I'm quite like excited also to see like more CeFi styled but DeFi protocols that offers a really good like UI UX experience for the users coming in, and at the same time it's permissionless, so it's non-custodial, and like you hold your keys, you hold your assets. So I'm quite bullish to see like protocols going that directions. Like currently, like in DeFi, most of the protocols like just have pretty bad like UI UX, and it's just terrible compared to the SEX. But at the same time, it's like after what happened with FTX and etc., you also want to be like responsible for your own assets. You don't want anyone to like custody your assets. So I think that kind of combinations would go really well. Like this year, we'll see a lot of experiments over there. Serafin?
Yeah, I'm thinking it would be cool to see something around OSDs that's not Ethereum based, like some other protocols releasing their own OSDs. So it's not like lots of protocols create a lot of fees, but it will be an interesting direction. So it's not just based on ETH, And just generally we like to see more interesting cultural stuff. Like if somebody came up with some crypto-based anime or something like some entertainment stuff related to crypto. That's not just give me key and Ponzi, But that's just me. That's not exactly DeFi, but I look forward to that.
Oh, NFT5 maybe another big thing, for this year. A combo between like NFTs and DeFi. Like for example, like how do you collateralize your NFTs? How do you take a loan out of them? That might be interesting.
Yeah, like trading NFT, like NFT perps and stuff like that would be kind of dope. Yeah.
Token Breeze, any from your side?
Oh yeah, for me, I think bear markets are good for buildings, and it's been a while now. It's gonna probably last a bit more. We have a lot of interesting stuff coming DeFi wise. So like on the stable coins, we were expecting CRV, USD, and Go already last year. So I think this year we're gonna see both of them, and probably some other major releases. So yeah, just follow and keep at it. And I think it's probably one of the best time to actually get serious and involved in DeFi.
Cool. And I think for myself, it's probably the staking LSD wars. What's going to happen? Who's going to take the most of the pie? Is it going to be one dominant winner, like the way it is right now, or is it going to be multiple? It'll be interesting to see how that unfolds and the Legos that are built on top of that after the dust settles. One question, actually, guys. On Euler's front, you guys are on mainnet currently. Are there any plans to move to layer 2 or build on layer 2 at any point? Or
Yes, that is a plan for sure. So we started finally, working in that direction. So hopefully by April we have deployed on likely Arbitrum, maybe BNB actually. The ecosystem looks interesting, and a bunch of other chains too. So yeah.
cool, very cool. That's all from my end. Did you have any questions for one another, or if not, we can raise it to the audience. So, audience, if you have any questions, just raise your hand and I'll bring you up to the stage so that you can ask us questions.
Yeah. Before we're waiting for like audience questions, I actually have a question for you guys. Like you guys are like completely permissionless, and at the same time it's governance less. You guys don't have a governance. How did you guys like grow the community like in the bear market? Without like like a governance or other kind of like ways for community to kind of actively, let's say, contribute. But at the same time, you guys are quite big on CT. Everyone's talking about you guys. So just wondering, like, how do you guys grow that community?
I can have a go at it, and Brady Breeze can. For us, I think so some of the things that it kind of fell on our lap, and it helped with the community in general, with the whole FTX, Luna, 3AC, all the stuff. Also the Tornado Cash stuff as well, with the freezing of the contracts. I think that itself played a role in us in decentralization being at the forefront of people's minds, and I think with the greed being gone as a result of that, that helped us reassure or not reassure, but essentially remind people that LUSD is by far the most decentralized stable coin on Ethereum, and Liquity is also the most decentralized protocol on Ethereum. So I think that helped. I will say Chicken Bonds, the launch of it, the success of it has also been a big help. As essentially, degens are degens, and if you can earn boosted yield on a stable coin at a quite high rate, like that makes a lot of sense. And since the protocol also follows the same ethos as Liquity, where it's decentralized and runs on decentralized front ends as well, I think that has also helped us, at least in the last 6 months, of like keeping the community engaged as such as well. Breeze, maybe you have any comments in addition to myself?
Yeah, no, I think you pretty straight on. It's it's really a matter of I think for us at least lately, educating as much as we can on the core value and on what Liquity delivers and how chicken bonds work also, because this one was a bit more intricate to explain, let's say, and trying to find ways to empower and recognize community initiatives that are also going in that direction. And that's that's probably one of the coolest things, is we have quite a few people in the community that each got involved in their own way to help others understand, use, or make sense of liquidity. I see in the audience, for instance, Boca is here, and he's made two very dense and informative infographics to cover both liquidity and chicken bonds. So it's this kind of contributions we're trying to make sure they don't go unnoticed, essentially.
That's pretty dope to hear. I like how you put it. Like degens are just chasing the highest yields in the entire space. That's quite a nice way to put it.
Cool. All right. I'll open the floor now to any of our guests, our audience. Sorry, if you have any questions, please raise your hand and I'll bring you up to the stage.
They're too busy aping in some LUSD into Euler.
Yep. I think, Jeremiah, I've just given you this, brought you up to the stage, so go ahead.
Amazing, thanks. Hey, can you talk a little bit more about chicken bonds? Actually, I haven't heard of those yet.
Token Breeze?
Sure. So, chicken bonds are an experiment we launched in October, November for LUSD. And the goal is to capture protocol on liquidity and help grow and stabilize LUSD price at the same time. And to do so, it's essentially a kind of yield earning game for a depositor on the LUSD, where they have a strong guarantee because of a mechanism we call the chicken out, a way to cancel your bond that enables you to recover the full amount you invested initially at any time. So it makes it a no-loss game. And in the process, the protocol also captures some liquidity that is supplied, some LUSD that are supplied as liquidity to the curve pool and further enhance the yield loop of the whole system. Also comes with an NFT component where when you create a bond, you get an egg. And as you interact with the system, depending on what you decide to make of that bond, your two options are essentially canceling it, or when it's broke even or further more interesting, claiming it, your NFT evolve accordingly, and you can get some really cool, epic stuff.
Cool, thanks.
Try to give you like the 2 minutes rundown, but yeah, feel free to check on the Liquity channel or Twitter for chicken bonds. We have a separate Twitter. You'll find more docs.
Cool, guys. I think it seems like that's the only question we're receiving today. People are a bit shy, I guess. In that case, I guess we should just wrap it up. We will upload this on YouTube at some point as well, guys. So you can always listen to a re-recording there. But Seraphim, Patricia, thank you so much for joining, guys. And yeah, we'll be in touch again soon.
Thanks a lot, guys. Cheers.
Thanks, guys.
Yeah.
Glad to be here.
Thanks.